Hi everyone, welcome to this broadcast session. This is Xinjiang from Mackenzie. I am a solar market consultant focusing on Asia Pacific, and I will share our latest Asia Pacific solar market overview. I will also cover the impact of carbon neutral targets and the potential competition between solar and wind. Before we start, please allow me to use a few seconds to introduce Wood Mackenzie's Power and Renewables service. We have covered wind, solar, storage, grid edge, and power outlook in our service. For solar, our service includes three parts: solar supply chain, solar pack, systems and operations, and solar market dynamics. Me myself is working on the market side. We track projects, pipelines, and policy update in over 100 countries across the world, and we publish quarterly reports to share our findings. Today, I will share our solar market outlook based on the 2021 Q1 forecast. Okay, that's enough about WoodMac, and let's get started. Here is the global solar overview. The figure here shows the annual solar PV installation by region from 2016 to 2026, and we can see that despite coronavirus headwinds, the solar market growth even strengthens in 2020, and then from 2021 to 2026, global PV installation will grow at a 7% annual average. 2026 is expected to break the 200 gigawatt ceiling, only 7 years after the first 100 gigawatt year in 2019. Asia, which is labeled in dark blue here, takes up a significant share. That is over 50%. This is mainly driven by the decreasing cost and the strong policy incentives. If we step back to 2020, we can see that the Asia share reached almost 60%. This is because China and Vietnam's installation rush by the end of 2020, and I will talk about the details in the following slides. Besides Asia, more smaller markets such as Africa in light blue here and Middle East in yellow here are also expected to expand in the next few years. Then let's look at the country breakdown of the Asia Pacific annual solar outlook. The stacked columns here are the installation in each country. We can see that China, labeled in blue here, is always the leading country. In 2020, its installation reached 48.2 gigawatts to complete the final round of subsidy and to fully utilize the grid quota. The same story happened in Vietnam, which is labeled in green here. 2020 was the final year for its feed-in tariff, and the installation rush led to a total installation of around 14 gigawatts. This also made Vietnam the third largest solar market globally last year. The red line in the figure is the annual growth rate. We can see that the annual growth rate before 2020 was faster than the world pace, and then it will drop in 2021 due to the subsidy phase-out. Then it will ramp up in a stable manner to around 95 gigawatts per year till 2026. The follow-up policies after subsidy phased out, together with the declining solar costs, are essential to avoid the so-called solar coaster situation that happened in some European countries before. The carbon neutral targets in China, Japan, and South Korea, the crop PPA scheme developing in Vietnam and Singapore, the net metering development in Malaysia, the market reform in Indonesia are all good examples for follow-up policy. I will talk more about them in the following slides. Then let's look at each market closely. First, China. Continuous policy support is essential to its stable growth in the next 5 years. The figure here shows its annual solar installation by sector. The light blue bars are less than 20 kilowatt, which is mostly residential solar. The dark blue bars are less than 1 megawatt, and it is mostly commercial solar. The gray bars are less than 5 megawatt, and these are mostly industrial solar. And the green bars are larger than 5 megawatt, which is mostly utility PV. If we focus on the time frame starting from 2021, we can see that all the sectors are growing, and this is mainly because of the decreasing LCOE and the strong policy support. The carbon neutral target is a leading long-term policy. The target of 1,200 gigawatt solar and wind by 2030 is another specific one on renewables. And the 14th five-year plans in each province are more specific short-term targets. If we look at the share in different sectors, we can see that in the past 5 years, from 2015 to 2020, the green bars of the utility PV were taking up a larger share. Compared to that, in the next 5 years, the share of distributed solar sector will increase. This is because the subsidy for distributed solar continues, and its demand is increasing, especially in coastal provinces. Another thing I would like to mention here is the profitability. I believe everyone in this industry has seen the price increase this year, and we are all wondering when it will reach the peak. This has brought much pressure to solar players. Even though the general trend of solar cost is decreasing, short-term fluctuation still exists, and there is fierce competition in the China solar market. Since the 1,200 gigawatt target does not specify the divide between wind and solar. As wind price decreases, there might be a competition for solar and wind. In India suffers a lot from coronavirus. As the figure here shows, the red dashed line is our focus before COVID-19, and around 15 gigawatt solar PV installation is downgraded. We have seen a huge amount of COVID cases this year, and this will disturb the 2021 installation as well. Therefore, the recovery will not be stable as early as 2022. Among all the sectors, even though the distributed solar is also developing, we can see that the green bars of the utility PV take up most of the share. This is because actions have been one of the main drivers for the Indian solar development. The attractive tariffs support the utility PV development in India. However, as the tariff goes down and the coronavirus cases increase, utility PV share gradually decreases. From this figure, we can also see an increase from 2022. And besides the impact from LCOE decrease, this is mainly driven by the 2022 target of 100 gigawatt solar. Even though we do not believe it will be achieved, this will pull up the Indian installation to the pre-COVID level, and the 2030 target will start to have impact from 2025. I would like to talk about the barriers in the Indian solar market as well. Its grid, or to say its transmission and delivery system, is a major constraint. And the profitability is a concern due to the always delayed or even cancelled tenders in this country. Then Japan. According to the annual solar outlook figure here, the green bar for utility PV is very limited after 2020, and distributed solar leads the increase. If we look back to 2015, we can see that there was decent total installation, and then it goes down year over year. This is because FITs are growing down, and the pressure from permitting and high land cost is striking the solar growth. Then please look at the year of 2022 here. We can see that the market is gradually increasing. Even though FIT scheme will end in 2022, and the following FIP scheme, which is the feed-in premium scheme, is less attractive to solar developers, we believe the solar economics, together with the carbon neutral target impact, will be a strong driver for solar growth in the future. In South Korea, this solar market is similar to Japan's to some extent. They both have high land cost, and their distributed solar development is outcompeting utility PV. However, these two countries have very different growth trend, as the figure here shows. The dark blue bars and the gray bars, which are the commercial and industrial sectors, dominate this market. There is also a small portion for large-scale solar, which is in green here, and this is mainly benefited from floating solar projects. Different from Japan, South Korean market is not seeing an obvious decline because of FIT phase out. And this is because the clear RPS target is working as a following up support. Besides that, the deployment of floating PV and the developing corporate PPA scheme are also very supportive. Then Australia. From this annual solar outlook, we can see that small-scale solar is increasing, while utility-scale solar is decreasing in the next 5 years. The main reason is that Australia already has a high solar penetration, and distributed solar has larger potential now. The mature corporate PPA scheme, state-level renewables targets, and deployment plans for renewable zones are very helpful as short-term policy support, especially in the next 2 to 3 years. However, because of the high renewables penetration, curtailment issue remains as a concern. Profitability and the lack of other long-term national level support are also issues for developers in the future. And ASEAN, if we look at Southeast Asia market as closely, we can see that Vietnam in blue here is leading since 2019. However, it is hard for Vietnam to keep this high installation volume in the next few years. Grid stabilization is the main concern. However, with the direct PPA scheme and the trial auctions going on, Vietnam is still a very promising market in ASEAN. Similar to Vietnam, establishing following up policies and enabling routes to markets for solar projects will be the key for growth in other ASEAN countries as well. For example, Thailand, which is in green here. It was the most heated market before Vietnam in ASEAN. However, the lack of long-term policy support cooled down the market, and as LCOE decreases, the market is gradually growing now. Malaysia in dark blue here is another example. It updates its net metering scheme regularly to support its solar development, and it has a stable annual growth in the next few years. Another country I would like to talk about here is Indonesia. It is labeled in dark red. Indonesia used to have a build, operate, transfer model, and now it's changed to a build, operate, own model. And this model provides more opportunities for solar developers, and the market is gradually growing. To summarize a little bit, once the policy uncertainty, market reform issue, and land acquisition challenges are addressed properly, Asian market is very promising and has great potential in the future. Another thing to mention here is, as auctions introduced in ASEAN, this market is more open to foreign investments now, and more neighboring and foreign investments are attracted to this region. The question that I often receive is, which market segment has the largest potential in ASEAN? The answer is both, but the situation varies in each country. The figure here shows the share of installation by market segment from 2021 to 2026. Thailand and Vietnam have a larger share of small-scale solar, and their rooftop sector are both very attractive to investors. Philippines and Malaysia are balanced, but with a slightly larger share of utility-scale solar, while Indonesia has a much larger share of large-scale solar. In the end, I would like to summarize a little bit, and I have 2 takeaway messages for you. The first is Asia Pacific is a growth engine for the global solar market, delivers over 50% of global installation from 2021 to 2026. And there are so many heated markets in this region, such as China, India, Australia, JKT, and ASEAN. Second, the carbon neutral targets, the corresponding action plans, and the decreasing solar LCOE can ensure the long-term solar expansion in Asia Pacific. However, the fluctuation in solar price may affect the installation in the short term and may cause potential competition between solar and wind. Okay, that's all for today's broadcast. Thank you so much for participating. And if you have any questions later, please feel free to email me. Thank you. Bye.